Management Accounting C370, Unit 5 and 6 Summary. Considering about traditional costing systems, according to Atkinson et al. 2012, product costing systems are important because product volume and mix explain a large percentage of the costs that companies incur. And if companies want to influence their costs, they must understand the relationship between the volume and mix of the products they produce and the expenses they incur. And also the product costs provide the bridge between operating expenses and production output. Considering about traditional costing approach, the key benefits of traditional costing approach include that it's adequate financial reporting role of inventory valuation, it's simple, it's easy to use and understand, and it's also less costly. However, when it comes to the drawbacks of traditional costing, it exclusively uses volume drivers to allocate overhead costs, and this leads to product cost distortion, and it's clearly explained on the table on the next slide. Considering about the cost distortions in production volume-based cost systems, when it comes to the production volume, when we have low volume specialty, the costs will be undercosted, that is, too little overheads will be allocated to the products. Whereas when there are high volume products in the main line, and in that case we will be overcosting them because too much of overheads will be allocated to the products. Not only that, when the product size is small, once again it will be undercosted. When it's large, it will be overcosted, and when there's a complex design, again it will be undercosted. So considering all of this, in a summarized version, we can say that these product volume-based costing systems will undercost the cost in terms of allocating less overheads to the products when there is a low volume production done, when the product size is small, when there is a complex design, and when the production requires many parts or unique parts, and also when the product machine setup requires many long complex machine setups. In these situations, the overheads allocated will be less, and therefore the costs will be undercosted. Whereas the costs will be overcosted, or too much of overheads will be allocated to the products when high volume production occurs, when the product size is large, when there is a simple design, and when it requires few or common parts, and when it requires few short or simple machine setups. Considering the above facts precisely, the under or over recovered overhead amount is most commonly charged to cost of sales, where it may be allocated between cost of goods sold and any unsold inventory. So as indicated by over or under recovery, if the budget costs and activity levels are not achieved, then decisions about pricing or product profitability may be incorrect. Therefore, budgeted and actual costs should be tried to be made equal, and unused capacity should be tried to be reduced. So the solution for all of these problems has been provided by the modern accounting systems like activity-based costing.